I want to bring in David Kudla. He is the CEO of Mainstay Capital, about $2 billion under management. David, good to see you. Thanks so much for joining the conversation.
Thank you, Maria.
So your thoughts first on energy, on the heels of what Phil was just saying. We're going to see a lot of mergers here, probably acquisitions.
Yeah, what we'll see
is this an area you're investing in, energy, or no?
We're only in the refiners right now. We're waiting on oil. We've been waiting on oil for a while to reach a bottom before we'll move into some of the E&P names. But we've been in the oil refiners. We've looked at oil really for 2015 trading in a range of $35 to $65. $65 the upper bound because of the U.S. frackers. That's where they come in. We're the marginal producer now in the world. Lower bound because of refiner turnover and summer driving coming to an end. But we're ready to raise that lower bound. That upper bound, we think oil stays low for a lot longer.
But this interview with Tillerson was really revealing, Maria's interview, because he says, look, valuations haven't gotten far enough down yet, and yet you've seen stocks plummet. You've seen consolidation in the industry, lots of mergers. You've seen a lot of companies on the edge of bankruptcy because they can't make their debt payments. Is this going to go even further? It's depressing the market. It's causing a rise in layoffs.
That's been the impact on earnings.
He's just broadcasting to make sure people know that they want him. He's not going to be jumping, right?
Yeah, that's right. That's right. I mean, he's expecting it all to get worse.
A big impact on earnings. If we look at the negative earnings we've had in the last 2 quarters, largely or mostly a result of one sector, energy.
And down 60%, I guess, in the last quarter. I want to talk to you guys about the broad economy in general, because that's the backdrop for investing, right? And so you're investing in the U.S., David, in Japan, you hedge out the yen, and you're invested in Europe, you hedge out the euro. Is that because you think those markets are going to go higher, or is it because of QE? What is the reason?
Well, we call it, with Japan and Europe, we call it the disingenuous trade. We have quantitative easing in Japan and Europe, massive quantitative easing programs. Our quantitative easing program came to an end this time last year, and we're looking towards Fed tightening. So tighter monetary policy there, or here, looser monetary policy in Europe and Japan, and that means a stronger dollar, so we want to hedge for the dollar. We saw it spike yesterday on Janet Yellen's comments, and we've seen strength, the euro falling from 114 to 108 over the past few weeks.
So if Europe and Japan are the disingenuous trades based on monetary policy, is U.S. a trade, a positive trade based on the organic growth of the economy? Is that why you see the U.S. rising?
Yeah, if we look at the U.S. economy, and that's really the concern, the U.S. economy, we have growth. It's anemic growth, but we have growth all the same. Where in Japan, they're fighting again to stay out of another recession, trying to grow inflation. And in Europe, they're moving along. They're behind us in the cycle. So the fundamentals are better there. But we see it as that QE floor under stocks that gives you that,
that's what Tony was saying,
fundamental support.
I was saying earlier, is it really the economy or is it QE? I mean, we had such great responses to QE in the beginning, but the more you bring the drug, the less response you get, as we see in our own economy.
So take Japan, and we talk about Abenomics, the 3 arrows of Abenomics. Really, Abenomics is only Coronanomics, which means the first arrow is fiscal stimulus has come and gone. We have monetary stimulus, what Kuroda is doing.
And none of the economic reform.
And none of the economic reform. None of the structural reform. So really, it's only that second arrow.
Kevin?
Favorite sector in the U.S., what are you seeing? I mean, we've talked about healthcare. We've seen consumer discretionaries up. Where are you seeing the best place in the U.S. if we're talking about being here domestically and the stronger dollar?
We like the NASDAQ 100 triple Qs, but specific industry sector, we like biotech. We got a lot of headline risk in biotech about a month ago, about 5 weeks ago, with the tweet from Hillary Clinton. And now we've got Congress looking into drug pricing. We bought biotech on that headline risk, and we've seen a rally. And so you
don't think we will get drug pricing legislation?
I don't think so. If the two senators that are looking into this, I think that what they're doing, they're looking at generic drugs that have been bought by another company, and someone is raising the price because they can.
It's not big major biotechs, like you say. It's not Gilead. It's not Celgene.
That's right.
It's not those names in the triple Q, and those names are actually trading at a steep discount.
So you want to buy those names?
Yeah, absolutely. I would buy those.
Let me ask you, David. Do you own Facebook?
We do on Facebook. Yeah.
Good day you're having today.
Good day. Yeah.
When did you buy that? Have you owned it for a while?
We've owned it for a while. Yeah, we've owned it for a while, and they really are firing on all cylinders. I mean, when you're in social media and your average monthly users represent 1/5 of the world's population, you're doing pretty good. And continue to find ways to monetize the business model.
When you spoke with all your titans, Tony Robbins, for the book, you spoke to people like Ray Dalio, one of the most successful hedge fund managers out there, or overall investment managers, including others, John Paulson. Did you get a sense that they were diversified, like David's talking about biotech, social media? I mean, how were they allocated?
Well, they're all different, right? Some are macro traders, some are individual traders. I interviewed 50 of them. But, they all understand the power of social media for sure at this stage. Carl Icahn, most people think of Warren Buffett as the greatest investor of all time. He's averaged 20% since 1968. Carl Icahn is 31% compounded. He sends out one tweet about Apple and it goes up $17 billion in 2 hours.
Unbelievable.
So he understands the power of social media, no question about it.
He was on the show earlier this week.
Real quick thing about social media. We're seeing it actually being treated as media. Goldman Sachs announced that they may no longer be issuing and putting out press releases through Business Wire. What they may be doing now is actually just putting it on their website and releasing it on Twitter. And then that counts, according to the SEC, as public dissemination. We saw that with Reed Hastings when he was tweeting. The SEC came through and said, yeah, that is actually public knowledge and information.
That's unbelievable.
Yeah.
That's really a good point. All right, we will continue this conversation. David, good to see you today.
Thank you.
Thank you so much for joining us, David Kudla from Mainstay.